SingPost lah, ISO team, Fraser Property, Yoma, and all that.
So companies planning to do site visits or engage the investment community after an extended period of time. Usually they have something positive to share. Companies, Fraser's Property and SingPost, they may be interesting. And a 5.6% FY24 dividend yield. It has the lowest price to book and highest dividend yield among its peers. SingPost may have 2.5 billion worth of assets slated for value unlocking in the next 3 years. If based on chart, if they are trading at all-time oversold or overbought levels by RSI, easier to find a good company in a good industry, so as to increase the probability of a profitable trade.
Hey everyone, welcome back to the channel. Today we are hanging out with my friend Ernest Lim. Okay, so you might know him from his blog, ernest15%.com, and his remiser work and all the materials he send out on a regular basis. But before we dive in, right, if you are new here and enjoy this kind of podcast episodes, please help me to tap the like button and subscribe to the channel so you never miss another session. Okay, so without further ado, let's give a warm welcome to Ernest.
Hi James. Thanks for inviting me to your channel. Yeah, I've seen the people whom you have interviewed, and they are all of extremely high caliber. So when you first text me in May, I told my wife that I felt very honored to be invited. So for those viewers who have not subscribed to James' channel, do subscribe to his channel now. Yeah.
Thanks a lot. Yeah, thanks for the mention of my channel.
Yeah.
Okay, so we have a lot to cover, so I will just go into the next question. Right,
Sure.
Thanks so much for joining us today. I appreciate it because I know that being a remiser, you have a lot of things on your plate, and we have to do this during lunchtime as well, right?
Yeah.
Okay,
and thanks
so
for sacrificing your lunchtime also. Yeah.
No worries, I can have it later. Okay. Yeah, to start off, right, I saw that you have been an associate with GIC and investment manager for a few companies before making the switch to being a remiser under CGS, CIMB. So I'm very curious to know, right, what was the main trigger that made you want to do this?
Actually, I've always been very interested in equities since I was in JC, especially in trading and investing. In NTU, I studied accountancy so that it will give me the tools to understand the financial statements. However, I knew from the start that I wanted to do trading and investing and not to be an auditor. But if I were to start being a remiser straight from NTU, it will be extremely difficult because number one, I lack the practical knowledge. Academic info is definitely not enough. And then secondly, I do not come from a wealthy family. So during NTU, I got the interest-free loan, bank loan to pay for my uni loans. So after graduation, the interest-free loan, the interest itself starts to accrue. So I borrowed from my parents first to pay for the loan, and then subsequently I returned them with interest. Although they never asked for the interest, nor they rushed me for the payment, I felt it was right to set this loan repayment as the first priority. So if I were to start by joining as a remiser, it will be 100% commission based and zero base pay. So it won't be sustainable at that time. And thirdly, I lack the context. So I do not have the context like the bankers, analysts, fund managers, companies, tauges at that time. So because I started, from NTU itself. So it will be extremely challenging. And lastly, I lack the profile. So few clients would want to listen to a young punk from NTU when he has never experienced large market swings and little practical knowledge. So in 2010, when I first joined as a remiser, I felt that I've overcome at least some of the challenges, and it's time to take the plunge. I was 29 years then, and I entered CGSI. Now it's known as CGSI, and directly as a remiser. Yeah.
Wow, thanks for sharing your story. Sounds like those rags to riches kind of a story.
But it's not that. But it's just that we are from the middle income. The lower end of the income range families. But having said that, my parents, they have done their best. Yeah.
Yeah, I mean, it's still quite inspiring. Yeah, for me
Mm.
also. The next question that I have, right, is that I think a lot of people are also keen to know what a remisier does and how they stand out, especially in this era
Mm.
of low-cost brokers, right? So, do you mind sharing more of the value-added services you mentioned in your blog, such as like, I know that you source information from Bloomberg, you do personal write-ups, you send out all these market updates, but can you sort of
Sure.
share more information on that? Yeah.
Mm. Thanks for asking this question and letting me advertise. Yeah. So I'm aware.
No.
Yeah. I'm aware in this era of low cost brokerage where everybody races to the bottom in terms of commission rates. For my work, I don't compete by giving rock bottom rates. I compete by value added services. So examples of some of the value added services would be I'll do regular market updates with my personal opinion on the market outlook. Usually after readings from various sources, and I do quote some of the sources also to show my basis. And there will be some personal technical highlights on companies which I'm looking at. Technical highlights like the charts, basis, supports, resistance, and what is my chart outlook. Mm, and there will be also personal write-ups on the companies based on fundamental analysis, usually after one-to-one meetings with key company management. And on the
Mm,
Bloomberg part, for example, when I send out a note on the banks to alert clients that bank shares have suddenly broken out from a chart formation, I will also do some manual compilation of some stats like the last time price, FY24 price to book, dividend use, consensus target price, and the estimated total potential return, and the RSI, etc. So this will help the companies have clients have a good perspective
mm,
in
mm,
addition to analyst reports. So these are some of the
mm.
value-added services that I put forth.
Wow, sounds like a lot of work.
Yeah, it's a lot of work. So sometimes
Okay,
I'm
okay.
so unfortunate that my wife doesn't complain. Yeah. Mm.
And supportive wife. Yeah, thanks. Okay, so next question. Now let's talk about more on the stocks analysis portion. So for one, right, can you describe your overall investment philosophy and the kind of key principles that guide your stock selection process? And if you have enjoyed this video thus far, I will greatly appreciate it if you can help me to smash that like button, subscribe to my channel, and ring the bell so you get notified every time I release another stock analysis video.
Sure. So there are two main types of stocks that generally they will catch my attention first before I decide whether to take a closer look at them. So firstly is the stocks with near-term catalysts. Near-term catalysts, just to cite a couple of examples, can be in the form of a large earnings bump this year, not factored into valuations yet, or companies
Mm,
planning to do site visits or engage the investment community after an extended period of time. Usually they have something positive to share. And perhaps some companies, they may be bidding for large contracts and they may stand a good chance of getting them. So these are the companies with potential near-term catalysts that will get me interested. And the second category will be if based on chart, if they are trading at all-time oversold or overbought levels by RSI. So this will be two broad categories that will first get me interested before I decide to take a closer look. And
mm,
thereafter, with these two broad categories, I will dive deeper and using my 5 other important criteria. So firstly,
mm,
I need to understand the company and the basis of owning the stock. Because,
mm,
like for example, Peter Lynch once said, know what you own and why you own the stock. So this is
mm,
important because some of my clients, they like to ask, they have this ABC stock they have been holding for some time. So now, whether they should continue to hold, buy more, or sell their stocks. I'll usually reply that one of the key considerations to the above question is to evaluate their initial basis of buying the stock in the first place. So, generally
mm,
speaking, if we just view the stock as one sole investment without considering macro and portfolio aspects, if the basis is still valid, they can consider holding or buying more. If the basis is no longer valid, then they can consider taking profit or cutting loss. So the first criteria will be to understand the company and the basis of owning the stock. Secondly, I'll prefer that I have access to management, because similarly, like any other investor, whenever I read company financial reports, their annual reports, industry reports, or prospectus, I usually end up with a lot of question marks, a lot of questions. So access to company management, preferably through one-to-one meetings, or at the very least, access to investor relation, is extremely helpful so that I can at least clarify some queries with them. And thirdly, the industry cycle is very important. So industry is important because most industries they have a business cycles which take time to pan out. If you buy stocks which are at the early stage of a multi-year decline, then you may incur large potential capital loss and opportunity cost. Furthermore, it's easier to find a good company in a good industry so as to increase the probability of a profitable trade. And the fourth one would be valuation. Yeah, generally speaking, valuation is quite simple. It's just if we buy at relatively lower valuations, then it offer a higher margin of safety. And the last one will be chart. In my above four criteria are positive, the chart should support the thesis. Yeah. If the chart itself diverges from the above points, then I should check my basis carefully. So in summary, this is basically some of the main criteria that I use to look into counters, but it takes quite some time. Yeah.
Oh, yeah. So I noticed you mentioned 5 things you look at, right, for a particular stock. Yeah, but thanks for sharing on that. So the number 2, access to management team, is the one that I find quite interesting, because I do see from LinkedIn that you often have one-to-one meetings, right, with all the management teams, and that is actually what I think sort of sets you apart, lah. As in you do really get on the ground and do this kind of research, which is why I also really like all your theses and your
Thank you.
analysis. Yeah. So
So
next, right?
yeah.
Sorry.
Just to add, let's say if for retail investors, if they do not have such access, they can consider going to AGM, at least just to look at the management, and hopefully they can have they can do some Q&A with the management. They can consider doing that. Yeah.
Yeah. Thank you for the insight also. Okay. So next, right? Next, when I saw your financial blog, I noticed we have something very much in common. So we both like to go into Singapore small cap stocks.
Yeah.
So can you share the reasons why you also like this space when everyone else, like they are usually very wary of SGX stocks, or like they want to go for more US stocks per se? Yeah.
Sure. Long time ago, I really like small cap stocks. I like them a lot because it's easier to get access to management, and as they are priced at a lower level, they offer price leverage. So, for example, I can buy more of a stock trading at 38 cents rather than a stock which is trading at $38. And furthermore, a stock that's at 38 cents, they move in beats of 0.005. Whereas a stock at $38, they move in beat of 0.01. So as a result, for every one beat, the small cap stock can make or lose $500, whereas the big one can make or lose $10. So I like this kind of price leverage and access to management. And usually small cap stocks, they are easier to understand because they are more niche. As in they focus on one or two things. It's unlike a conglomerate that have different business segments. Yeah. But over the past few years, as we have more and more exposure to leverage products, such as CFDs, margin, DLCs, warrants, etc., and as my portfolio becomes more meaningful, I skewed more towards the larger cap counters. And furthermore, because most of my clients, especially the high net worth clients, they prefer blue chip counters. That their main aim is more of a capital preservation with some upside. They like dividend yielding stocks. So hence I find that my time may be better spent in doing the blue chip counters and they still offer lots of opportunities. So at the moment, I still follow certain small caps for my own funds, especially if they have near-term catalysts. But generally
Mm.
speaking, nowadays my preference is more of the mid to a large cap counters.
Oh, mid to large cap already. Okay, okay.
Mm.
So that's very nice. Okay. Then the next question I have is that because I'm looking at your blog right now, let me just share screen. Um, okay. So I noticed that you have a few write-ups lah, in your
Mm.
blog, like for example, SingPost lah, ISO team, Fraser Property, Yoma, and all that. So can you also maybe choose two companies that, I mean, within your blog that make you feel confident in their future prospects to share with our readers?
Sure. Firstly, before I give my personal opinion on the stocks, I just want to emphasize that I'm not an equity analyst, so I'm just a stockbroker, and the counters that I mentioned may not be suitable to the viewers' risk profile or investment needs. Hence, it's always crucial to do your own due diligence, as everybody is different. The below counters that I mentioned are just for general info, and they are not specific stock recommendations. Actually, there are many companies that are extremely interesting. So I will just quote a couple of examples here. To see
Mm.
more of the companies that I follow, you all can check out my blog, the earnest15%.com. Yeah. So two companies, Fraser's Property and SingPost, they may be interesting to take a closer look. So for example, Fraser's Property, very briefly, their market cap is around 3 billion Sing, and it trades at 0.29 times price to book and a 5.6% FY24 dividend yield. It has the lowest price to book and highest dividend yield among its peers. And average analyst target price put by Bloomberg is around 122. So inclusive of an estimated FY24 dividend per share of 4.5 cents, this works out to be a total potential return of 58% should the consensus be right. So going to the details, based on first half results, FPL, Fraser's Property, they have a 2.3 billion Sing of unbilled residential revenue as of 31st March, mainly in Australia, China, and Singapore. So this lends visibility to their results. And based on their first half results, FPL has unlocked value by divesting assets worth 1.1 billion of properties via their sale to its REITs and third parties. And besides unlocking value, they also have two other main focus areas, which is to increase development exposure and strengthening recurring income streams. And importantly, based on various sources, FPL has stakes in Fraser Centrepoint Trust, Fraser Lodge, Fraser's Hospitality, and Fraser Property Thailand, worth an approximate amount of 3.6 billion Sing. And FPL's current market cap is around 3.1 billion. So the value of their listed entities is already more than FPL itself. As DBS Research, they report aptly puts it, there seems to be zero value ascribed to FPL's their ability to grow their hospitality business, and their track record as a developer of residential homes in Australia and Singapore. So naturally, there are risks involved. For example, Fraser's Property, their credit matrix has deteriorated a bit. Their net debt to equity ratio has risen from 0.76 times as at 30th September 2023 to 0.8 times as at 31st March 2024. And this is likely to increase with the complete redemption of its 600 million Sing perpetual securities in April this year. And FPL is unfortunately extremely illiquid. So average 30-day volume per day is less than 100,000 shares traded. So it's an extremely illiquid stock where it's difficult to enter or exit. And they have limited analyst coverage. So usually counters with a limited free float, lack of trading liquidity, they typically have less analyst coverage. Yeah. Oh, and one
So
more thing.
waiting for you to unlock the value.
Maybe next time you can also showcase it on your blog. I guess it
on
have more
my
power.
YouTube channel.
Yeah, it may be a potential value trap because based on Bloomberg, FPL has traded an average price to book of 0.3 times for the past 2 years. So even though
Mm,
its valuations are low, such valuations may remain low for an extended period of time. Yeah, unless maybe FPL can improve its credit matrix, undertake capital recycling, or strengthen recurring
mm.
income stream, or perhaps it appears on your channel, then there will be a price discovery.
Near-term
Yeah, so that's
catalyst.
so that's the first one, Fraser's property.
Mm,
The I go to the
second
second
one.
one,
You
SingPost.
want me to share screen for the write-up?
Sure, thank you.
Which one? SingPost, right?
Yeah, the second one is SingPost.
Okay. Yeah, you can drink some water. Let me share screen. Okay. You can yeah,
Okay, yeah,
reiterate the points. I will just scroll accordingly. Yeah.
yeah, thank you. So SingPost market cap is around 968 million. Some of the merits that it has is firstly is attractive valuations, trades at 0.7 times FY25 price to book and 3.1% FY25 dividend yield. That financial year ends in May. And average analyst target price pulled by Bloomberg is around 62 cents. So inclusive of an estimated FY25 dividend yield of 3%, this translates to a total potential return of 47 cents, 47% should the consensus be right. Yeah. And thirdly, importantly, there's likely to be an earnings bump this financial year due to its from its full year contribution of its Border Express. In SingPost's latest FY24 results, that there was only 1 month of contribution from Border Express, which contributes Aussie 25 million in revenue and an operating profit of Aussie 2.5 million. So if I just analyze it simplistically, ignoring factors such as seasonality, cross-selling opportunities, and cost savings, and assuming all things remain equal, SingPost should be able to recognize Aussie 300 million in FY25 revenue and Aussie 30 million in FY25 operating profit. And to put this into perspective, SingPost FY24 revenue and operating profit were Sing 1.7 billion and Sing 85 million respectively. And SingPost, fourthly, they have divestment opportunities worth approximately Sing 200 million in the near term and perhaps more than 1 billion over the longer term. In SingPost's strategic review, they unveiled it on 19 March this year. SingPost has identified a list of assets and businesses that are non-core to its strategy, which can be monetized to recycle the capital, and potential proceeds will be used to pare down debt, support growth investments, and return value to shareholders. So the short to medium term divestment targets are likely to be 4PX and Famous Holdings. Based on the
Mm,
Straits Times article last year, SingPost's subsidiary Quantum Solutions International (QSI) has been granted 2 put options to sell its equity interest in 4PX to Cainiao, worth approximately 96 million. And secondly, Famous Holding is one of the non-core holdings which analysts have highlighted to be potential divestment targets. So both of the above divestments, if materialized, may fetch combined proceeds amounting approximately to 200 million Sing. And over the medium to long term, SingPost Center, this one is big because it's valued around 1.13 billion on the books, may also be one of the potential divestment targets. But because it's being a larger ticket item, I suspect this potential divestment may take more time. And another potential value unlocking exercise may be its Australia business. On 21st June 2024, SingPost appointed Merrill Lynch Markets Australia as a financial advisor to the board to formulate optionalities for the group's Australia business. So all in, as SingPost commences its strategic transformation, CGSI, my company, they estimate that SingPost may have Sing 2.5 billion worth of assets slated for value unlocking in the next 3 years. And to put this into perspective, at the moment, SingPost market cap is around 968 million. So, and definitely for SingPost, there are also risks involved. For example, besides the usual business, geopolitical risks, forex, and macro risks, some other risks may be there's potential share overhang from Alibaba. Because Alibaba investment, they recently sold 72.5 million shares in SingPost at around 45.93 cents. And with this sale, Alibaba's investment stake in SingPost it is streamed to around 11.3% or around 255 million shares. So there may be some share overhang as markets may be wary of future sales by Alibaba. And another point would be SingPost may need several quarters of performance to convince skeptics. Because SingPost has fallen from an intraday high of 215 on January 2015 to trade 43 cents last Monday. So excluding dividends earned since then, SingPost has fallen a whopping 80%. So it's natural for the investment community to be skeptical as to whether SingPost can really deliver and execute on its plan. And this naturally takes time. Yep. So these are the two counters. I feel that they do have some catalysts and perhaps can take a closer look.
Yeah, thank you for sharing on these two companies itself. All right, so
No
we
problem.
talk a lot about the stock analysis, the potential upside and stuff, right? Now on the flip side, can you also share a company or stock pick that didn't work out as expected? So how do you actually manage the risk and what have you learned from it? Yeah.
So I bought this stock last year on the hopes of Indonesia granting a large contract to them on biometrics. However, it takes longer than expected, and share price continues to decline as it burns cash. It does have some contracts here and there, but it's not enough. So for this stock A, I make some small profits earlier on this year, but earlier on for this stock, but it was more than wipe out because it dropped from a last tranche cost of 8.5 cents to 2 cents plus. And yeah, I've already cut loss. Usually for small caps, okay, firstly, I cut loss because my initial basis of entry is invalidated. Up to now, they haven't announced any large contract, a super large contract yet. And for small caps, when it drops, it can drop fast because buyers can suddenly disappear. So all in, that's why over years, I also gravitate towards the blue chip counters, the mid to blue chip counters. It's easier to trade also. Yeah.
I understand. I mean, there's more liquidity as well.
Yeah, there's more liquidity.
Thank you. Okay. So next question I have is about asset allocation. So other than stocks, right, do you park your wealth anywhere else? Like, for example, in fixed deposits or money market funds from your company or what to, can prepare for market downturn when, there's a downturn to step up more shares on the bargain, that kind of thing.
For myself, I do have some cash. They are parked in they are for emergency funds. So they are mostly in cash or sometimes or in T-bills, a portion of them. But the main bulk of it, I put all of them in my margin account for trading and investing. So for me, I'm more of a risk taker based on the stock selection criteria that I outlined above. And at the moment, I'm around 100% invested. But because I have a margin account, I can raise my percentage invested easily to 200% if the need arises, if I see that there are certain stocks that I need to accumulate, if there are opportunities arises. Yeah. But having said that, so let's say if suddenly somebody comes to me and tell me that ABC small cap stock based on hearsay that there may be contract or good earnings, even though I'm a risk taker, I won't rush into it to buy, especially when if the stock have appreciated a lot already. And usually
Mm.
I'll definitely research first based on the above stock selection criteria. So sometimes, actually, sometimes after I research, after I take the time to research, perhaps the shares may have moved up higher. So in the end, I may have missed it. But to me, it's okay because I like to trade and invest based on my criteria. Yeah.
I mean, you have a very solid framework that you know you have to follow this, and even though time has maybe passed, you still stick to your own strategy, lah. So and it's been working well for you, lah. Right?
Yes.
Okay,
Yeah. I'm okay to miss out
thank you.
some opportunities. Yeah.
Yeah.
But I'll be more as in I'll be more sing an if I use my stock criteria. Yeah.
Yeah, same for me. Actually, my criteria is pretty much the same as you. So I also look for. So
Mm,
for me, I also look at small cap stocks in Singapore. I mean, that's
right.
the area that seldom people look at. So that's where I
Mm,
get those kind of bargains and those under
yeah.
research stocks. So one
Yeah.
of it is
So
Sim Leisure
mm,
for me. Yeah. I also have a
mm,
framework. Yeah, thanks
mm,
for sharing. Okay, my next question is what are some of your go-to tools for staying updated on market news and company analysis? So for example, your brokerage also do provide some of the
mm.
tools, right? Can you just
Yes.
share briefly? Yeah.
Some of the important tools that I use daily or very regularly are Bloomberg, Reuters,
Mm.
Share Investor for their market and price information, and I use Investing Note for their charts. Yeah, and
Okay.
besides my network of I mean for the research reports, I also use sginvestors.io plus the SGX Research website. These are two
Mm.
excellent free websites to read analyst reports. So viewers can also consider going there. Yeah.
Okay. Thanks. I
Mm.
mean, Investing Note and Share Investor is very good for Singapore stocks. So I
Yes.
also use them
Mm.
for myself. All right.
Mm.
Okay, last question that I have. What advice would you give to the audience or your younger self, assuming you're just starting out in investing?
Mm. I'll give two tips to my younger self. Given the existing market instruments available now, I'll tell my younger self to focus more on the mid caps or the blue chips rather than the small caps. Um, at the moment, we have CFDs, DLCs, margin to use. If blue chips can also make the same amount and easier to trade due to liquidity, then it may be better to do it via the blue chip counters. And the more important point would be I'll let my younger self know that the losing money is part and parcel of trading and investing. So as long as we learn from it and use our experiences to improve our methodology and coupled with appropriate risk management, it's okay. Yeah, as long as but we need to learn from it. Yeah.
Mm, okay,
So
thank you.
like for myself, even with that stock criteria, sometimes I also I mean the investments, the outcome of the investments didn't turn out as expected. Yeah.
Mm,
So we just have to
so
we just have to manage it.
yeah, manage the risk.
Mm.
All right.
Yeah.
Okay.
Importantly,
So
the risk management is very important.
thank you. Thanks for all the sharing. Yeah. So that's all the time we have for today's podcast. A huge thank you to our amazing guest, Ernest, for sharing all these valuable insights. Greatly appreciate you being here.
Uh, and once again, thanks for the invaluable opportunity to appear on your channel. And viewers, they can check out
Yeah.
my blog, yeah, at earnest15percent.com or drop me an email at the earnestlim15@gmail.com. Yeah,
Yeah. So
thanks,
definitely,
James.
I will also help you to leave
Yeah,
your blog URL and your email down in the description box below. If readers
appreciate
are
that.
keen to join you as a client, yeah. Okay, so
Yeah,
thank you. If you have enjoyed this conversation between us and want to see more interviews like this, please make sure to like, subscribe, and share the video. So once again,
Yes.
thank you, Ernest, for joining us. Okay, and thank
Thank
you,
you, James.
everyone. We'll see you in the next episode. Okay, bye bye. Bye bye, Ernest.
Bye bye.
Bye bye. Thank you. Before we end off, if you find the video helpful, I would appreciate it if you can help me to tap the like button and share the video so more people get to know about this video. Next up, don't forget to check out this video over here if you have another few minutes to spare. And I will see you next time. Thanks for watching and ciao.